One of the common misconceptions that traders make is thinking if they know where price is going, they have enough information to trade. In reality, they don't, because knowing where price is going is only half of the equation. The real question is where price is going from. That's the level of precision that you need in order to engage properly with the marketplace. Let's begin by taking a look at my overnight analysis, which played out almost perfectly for today's session. I notice I have a typo here. This is supposed to be Wednesday, June 24th. But anyways, we can see the new daily candle formed, fell just short of this annotated daily buy side imbalance, sell side inefficiency, the lower quadrant of it, and then broke lower. And I wanted to see the next draw being this pool of sell side liquidity here, which is last week. Here we have the 4-hour chart, and you can see that same daily inefficiency here. I've graded the equilibrium of the price range from this candlestick's low here to this candlestick's high here. And we have the equilibrium, which is where price was trading at that time. And you can see it using that lower quadrant there, the body closing beneath the low. Next candle opens, wicks into the low, and then breaks lower as it's working towards that sell side. And this was posted near midnight prior to the London session. And I wanted to see a draw to the sell side here. Price is always seeking internal range liquidity, which are imbalances or inefficiencies, or external range liquidity, which is highs and lows, relative equal highs, relative equal lows. And as price is near equilibrium at the moment and is working its way into the discount portion of the range, I wanted to see if it could gravitate towards this buy side imbalance, sell side inefficiency. And this is supposed to be 4-hour. I had quite a few typos last night. Sorry about that. Which is the first imbalance below the sell side liquidity in the discount portion of the range. Also, if you look closely, I don't have it annotated here, but this is near the optimal trade entry level of the range as well, the 70.5% retracement level. I also mentioned going into London, I would like to see if it can clean up the buy side resting near the lower quadrant of the daily inefficiency and then rotate lower. So this candlestick's high here was what I was looking at. If it could clean up that buy side and then rotate lower, that's what I wanted to see. And we'll take a look at that deeper here in the charts now. Taking a look at the 15-minute chart, I posted that around midnight, and you can see the buy side resting near the lower quadrant of the daily inefficiency here, which I've delineated, and price was predominantly consolidating during London and pre-session. If I was trading London, I would have waited for a sweep of the buy side, which never occurred, so there was no reason to engage, and then look for a rotation lower. But anyways, we can see 9:30 opens. We had consolidation in the first hour's dealing range, and then going into the 10:50 to 11:10 macro, which we'll look at deeply in the 5-minute chart here in a second. We can see price working into that buy side, just wicking into the lower quadrant, slight little mohawk there. The bodies are closing beneath the lower quadrant, and then we have the rotation lower. Price is in a premium relative to the midnight open here, sweeping the buy side as well. Here on the 5-minute, we can see the buy side being tagged right here, right at the start of 11 a.m., the new hour candle, within the 10:50 to 11:10 a.m. macro, the last ditch macro for the AM session. And then you can see going into lunch, consolidates above the midnight open before folding lower. And as you can see, it continues to fold going into the PM session opening range, starting at 1:30, a retracement higher, and then continues to fold into the inefficiency that I had annotated last night in the overnight analysis. Everything played out fairly accurately as per the analysis, but this isn't enough on its own to trade correctly and being on side. What do I mean by that? Well, in the analysis, I mentioned that I wanted to see the buy side being swept first and then folding lower. But as you can see, we had all this overnight sell side from yesterday's PM session. Asia low here, low formed after midnight, pre-session liquidity. And you can see that being swept with this low at 9:45 going in to the 9:50 to 10:10 macro. So at this point, if you're trading the AM session on a short-term basis, seeing how price is in relative discount with the midnight open, you may anticipate a run for the buy side here. However, in this range of consolidation from this candlestick's low to this candlestick's high, this is a large portion of the AM session. And if you're engaging in this time window, thinking and anticipating a run into the buy side, seeing these clean equal highs, you may have the draw correct, but it simply still would not be enough for you to be on side and walk away being green. So the question is, how can you avoid this engagement here and wait for the original move to unfold after this deeper retracement into the sell side prior to the clean move unfolding here? Well, I know that I'm looking for higher prices, but where is the buy side delivery going to originate from? What level needs to be reached before the narrative becomes active? Let me begin first by annotating our sell side pool of liquidity. Now let's take a look at the higher time frame on the daily chart to understand where the move would originate from, where the buy side delivery would begin. All right, so this is our sell side, which is the previous day's low on the daily chart, as you can see. Now, just looking at the daily chart here, what PD array or higher time frame key level can we use that is below the sell side liquidity that can act as a level of support for price to begin its buy side delivery, where it can show discount sensitivity and act almost like a springboard for higher prices? Well, if we just look back, we have this candlestick's wick, but as you can see, this pool of sell side is already in the discount portion of the wick, so we don't want to use that. If we look further, we don't have a fair value gap here from this candlestick's high to this candlestick's low. Since the wicks are touching, there's no gap, so that's not something we can rely on. But take a look at this candlestick here. What do you see? It's a down close candle, which acts as the bullish order block. And what is the most sensitive part of a bullish order block? From its opening price to the high. So if price is bullish, and if we expect to see buy side delivery after sweeping the sell side, we have this inefficiency, the bullish order block, which should propel price higher. And we do not want to see any bodies being laid in the lower half of it. And if we see sensitivity here, then that is a signature in price action that price is likely to begin its buy side delivery. So now with this in mind, let's go back to the 5-minute chart. Okay, so we have our annotated sell side. We have our daily bullish order block annotated from the opening price to the high. Now we want to wait and see if price can sweep the sell side and show discount sensitivity when it reaches the bullish order block. The key here is when it reaches the bullish order block. Let's look even deeper at the 1 minute. As you can see here at the 948 candle, price tags that sell side. Does it reach the daily order block? No. So as price reaches the 950 macro here and rotates lower, if you were just looking at the sell side being tagged, you may have used this inefficiency to enter. You have this bullish order block here. You may have used this bullish order block at the discount. We have a low, high, lower low. You may have used this as a breaker for your execution within the macro, thinking the sell side's been tagged. Smart money is now going to begin its buy side delivery. And if you had a moderate stop loss below the swing low or anywhere in this range, you would have gotten stopped out. Why? Because the higher time frame PD array that we were anticipating price to use to begin its buy side delivery and act as a springboard from where it would show discount sensitivity, it hadn't even been reached yet. So if you're engaging anywhere between here in this price range, you may be successful and price may continue to run higher. However, in seek and destroy conditions like today, you're more likely to get stopped out. You'll be frustrated and not have the clarity that you normally would had you just waited. And then when price returns for a deeper retracement into the sell side, another stop run below the swing low. So everybody who was long here, their orders have been absorbed. Price has tapped into the daily bullish order block. Does it show discount sensitivity? Yes. Wicks into it, doesn't even get to the upper quadrant. Bodies are closing above its high. It doesn't even spend too much time here, just one candlestick. And then boom, the buy side delivery begins. And you can see how clean of a run this is. And it was simply avoidable by asking the question, what higher time frame level is going to sponsor the buy side delivery? Where is the buy side going to originate from? What level needs to be reached before the narrative becomes active? Most people think patience is a psychological skill. And although that is true to some degree, I don't think it's entirely true. Patience is often the result of clarity. When you know exactly what you're looking for, patience becomes easy. When you don't, every reaction looks tradable. Every displacement looks significant. And every pullback looks like an opportunity. And for me personally, the biggest shift in my trading wasn't learning how to predict direction. As you can see, I can do that with a high degree of accuracy on a consistent basis. It was learning the direction alone isn't enough. If you identify what higher time frame key level price is moving from, in addition to where it's moving to, you'll naturally become more patient, more precise, and far more selective with your executions. And while most traders are looking to engage in this messy price action and chase the move without the clarity of knowing why and from where and when the move is going to take place, you can simply sit back, wait for price to meet your requirements, and then engage with precision. I hope this was helpful. I hope you learned something. Please leave a like, comment, and subscribe if you did. Thank you guys for watching, and I'll see you next time.